Now, as far as the air market is concerned, you're the clear leaders there with a significant market share. Courtesy Red Bus, you've got a significant play within the bus space as well. But, rail, what are the kind of opportunities that you see in some of these sectors where the headroom for growth for your company is significant?
But the important point to keep in mind with respect to us, the way we are trying to use is the data that we have, which is underneath. A lot of the product examples that Deep gave, whether it was Fairlock or a trip guarantee, is actually built on the back of very rich data over the years that we have it for the customers, not necessarily transacting consumers like 68 million life to date that we have on all three brands, but also the search data. So it's not that we are actually using this technology on top of public data that is all available out there. A lot of the AI/ML use cases are being talked about using public data. We are talking about all the data that is rich and high intent travel use cases data that we have, and we are leveraging that to build data science models, and then on top of that, putting AI/ML into play for us to be able to give a differentiated experience, if you will. Yes, we have in the private sector of the bus market. Redbus is by far the leading brand, and and online penetration is already there. We have the highest share of the online market. But non-private market, there's a huge headroom and an opportunity there as far as bus market is concerned. All the RTCs, thanks to COVID, one of the development was that every RTC pre-pandemic who would be apprehensive on bringing content inventory online, the digital platforms either on their own or say put it on our platform, it happened, it accelerated. So they all started to sort of look at the digital platform more seriously. And today we have all the inventory of the majority of the RTCs that are operating in the country. On IRCTC, we just have gone live with our hotels product out there on IRCTC platform just, yesterday, day before yesterday, because they have all the traffic on, let's say, rail users. We have launched, an independent app called Red Rail under Redbus, because our thought on Redbus is that we want to transform now, Redbus as a bus brand to actually a ground transport brand. I would also, by the way, just share a couple of very important data points. When you look at the overall internet penetration for the travel use cases, on an aggregate basis, it will appear that it is 43%, as one of the reports is suggesting. But right now, the higher penetration is only in case of private sector buses and domestic flights. But when you go to international flights, when you go to hotels product or homestays, it is grossly underpenetrated. So and with the now smartphones, like 986 million smartphones in the country, and the penetration is going beyond 25 cities, we are going to get more and more accelerated offline to online shift that will happen.
Over the last 10 plus years now, we've seen you make acquisitions across the group, whether it's companies like C-Trip, we talked about Redbus early on, or even companies like Book My Forex, which you've done as far as your fintech business is concerned. Given the, the spaces that you wish to occupy and the spaces that you perhaps wish to bolster, how important is inorganic growth and inorganic opportunity going to be for you?
We obviously do have the balance sheet now to look at opportunities more aggressively, as I guess we've done in the past. Our lens typically out there is things that, we would take either a long time to build ourselves, because time is probably the most valuable resource for everyone, or we perhaps won't do that good a job of. So I have to tell you, what we saw in Book My Forex was a fantastic fit of someone, actually a very interesting father-son entrepreneurial team who had been building this, had understood the Forex market, deep domain experience, had been doing it for a long time offline, and struggled perhaps to go online. There are regulatory issues and otherwise, and I think it was a complementary fit. So that's a place where we definitely felt that we need that domain expertise. Similarly with Quest to Travel, which was, very deep into the large managed corporate travel space. which is quite different. So an organization like yours or even larger companies, when they're booking travel, they want it fully integrated into their systems, into expense management, into approvals, and make it seamless so that everyone can book within their approval limits, or there are exceptions which can be done very quickly on the intranet that you're using, and everything then the billing, etc., flows seamlessly. They had spent, I think, almost 15 years building that kind of product, and we saw a lot of value in that. So while we offered a product for SME market or the SMB market, which is called MyBiz, which is a self-service tool, we weren't quite ready for the fully managed large corporate market, and we found that to be a pretty good, acquisition which we made over a 3-year time period, and it's worked out very well for us because now we have a full suite offering for that. We also acutely realize that it's very hard to make M&A work. So I can tell you, the largest M&A we did was when we acquired GoIbibo and Redbus, and it was a real, I think, a test of all the management capabilities that we had to fully integrate that.
It requires a significant amount of bandwidth, but Deep, is there anything on the anvil at this point in time?
Being a listed company, I think that's something which we can only share when things get, near done. But we're always scouting. We have a small but very focused team for M&A. And we are always scouting.
But let me ask you the aspirational growth number. If, in fact, we are going to see the travel business explode the way that the numbers suggest at this point in time, what could the aspirational revenue, the gross booking number, be for you over the next few years?
See, coming out of 2 years of sort of COVID recovery, 1 full year of recovery, we had entered into this fiscal with a lot of optimism. And a lot of actually confidence with the macro tailwinds behind us, seasonality coming in the beginning of the summer quarter, and that has played out beautifully. And this is despite that there was, call it travel inflation, which was higher than the overall inflation in the country. Because the fares were still high, even the room tariffs were still high, but despite that, there was momentum on the demand side. So we feel very confident about the demand positive outlook continuing from short term to mid term to long term. And some of the long term data is already there, with the industry players looking at very, very positive from a long term outlook standpoint. And some of the industry reports are also suggesting a very high growth rate. But if you look at, our sort of first quarter just reported number, the growth, we are looking at it on our numbers is one, of course, that there is going to be top line growth. So we had a record top line quarter of $2 billion, in the year-on-year growth of close to into 30s. Anywhere between 20 to 30% is going to be a decent growth number to look at from a midterm to long-term standpoint. But more importantly, and I can see the numbers flashing out on your screen, this has been the most sort of satisfying journey of turning the company, which was pre-pandemic. We were sort of getting into a break even, and we were almost set to turn the company profitable, and pandemic happened. And we had to rebuild the entire business, literally a $6 billion top line business, which was sort of, down to nothing right after the lockdown. In 1920, we were like minus 70 million adjusted operating loss to, full year fiscal year 23 to 70 million positive adjusted operating profit. It's been quite a journey. And then we started the year with a very healthy margin of a $30 million adjusted operating profit, which is about 15% margin. So we see it both from, from a growth standpoint and overall from a midterm to long-term standpoint, a story which will be a profitable growth story with an expansion on margin that is happening over the next 3 to 5 years.
Do you believe that that's likely to be the forecast for the startup ecosystem? There's been a lot of pain, but also a lot of focus on getting to profitability. Your take?
Yeah, for the startup ecosystem, clearly funding winter is there, but it also means that the better startups will do better. There is capital available for better companies. There are enough angel funds coming up. There are enough entrepreneurs, internally domestic entrepreneurs who want to fund young startups. So I think, Shereen, it's almost a filtering process. It's, the men from the boys. and you're going to see better companies continue to do well. There's no better place to be today than India. Cycles are there. They are probably sharper cycles, but shorter. So I think companies who can just tide over and do the right thing, not run out of capital and stay focused on the product that they're building, I think are going to benefit. And it's going to be a fantastic next decade for anyone who's a smart and committed entrepreneur.
Well, you're hearing it from two smart and committed entrepreneurs who've pretty much seen it all over the last 20 years. Deep, Kalra and Rajesh, thanks very, very much as always for joining us here on Young Turks. We wish you the very best of luck, and it's great to have you back on the program as always. That's Make My Trip with the forecast and the outlook for India's travel and tourism sector over the next few years. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more right after this.